The intelligent investor is a realist who sells to optimists and buys from pessimists. Successful investing is about managing risk, not avoiding it. You must never delude yourself into thinking that you're investing when you're speculating. In the short run, the market is a voting machine, but in the long run, it is a weighing machine. The investor's chief problem, and even his worst enemy, is likely to be himself. Buy not on optimism, but on arithmetic. Investing isn't about beating others at their game. It's about controlling yourself at your own game. An investment operation is one which, upon thorough analysis, promises safety of principal and an adequate return. Operations not meeting these requirements are speculative. To be an investor, you must be a believer in a better tomorrow. Individuals who cannot master their emotions are ill-suited to profit from the investment process. Those who do not remember the past are condemned to repeat it. A great company is not a great investment if you pay too much for the stock. Always buy your straw hats in the winter. Buy when most people, including experts, are pessimistic, and sell when they are actively optimistic. As the Danish philosopher Søren Kierkegaard noted, life can only be understood backwards, but it must be lived forwards. Invest only if you would be comfortable owning a stock, even if you had no way of knowing its daily share price. You will be much more in control if you realize how much you are not in control. Successful investing professionals are disciplined and consistent, and they think a great deal about what they do and how they do it. In the world of securities, courage becomes the supreme virtue after adequate knowledge and a tested judgment are at hand. Obvious prospects for physical growth in a business do not translate into obvious profits for investors. Buy cheap and sell dear. The best values today are often found in the stocks that were once hot and have since gone cold. On the other hand, investing is a unique kind of casino, one where you cannot lose in the end, so long as you play only by the rules that put the odds squarely in your favor. The genuine investor in common stocks does not need a great equipment of brain and knowledge, but he does need some unusual qualities of character. Without a saving faith in the future, no one would ever invest at all. To be an investor, you must be a believer in a better tomorrow. To achieve satisfactory investment results is easier than most people realize. To achieve superior results is harder than it looks. The stock investor is neither right or wrong because others agreed or disagreed with him. He is right because his facts and analysis are right. It should be remembered that a decline of 50% fully offsets a preceding advance of 100%. People who invest make money for themselves. People who speculate make money for their brokers. If you are shopping for common stocks, choose them the way you would buy groceries, not the way you would buy perfume. Before you invest, you must ensure that you have realistically assessed your probability of being right and how you will react to the consequences of being wrong. The true investor will do better if he forgets about the stock market and pays attention to his dividend returns and to the operation results of his companies. The essence of investment management is the management of risks, not the management of returns. The volume of credit depends upon three factors: the desire to borrow, the ability to lend, and the desire to lend. But investing isn't about beating others at their game. It's about controlling yourself at your own game.